Hi folks, welcome to another episode of Who Said What. I'm your host Krishna, and for those of you who are new here, let me quickly set up some context for what this show is about. See, the idea is that I'll pick the most interesting and juiciest comments from business leaders, fund managers, and the likes and contextualize things around them. Now, some of these names might not be familiar, but trust me, they're influential people, and what they say matters a lot because of their experience and background. So I'll make sure to bring a mix. Some names you'll know, some you'll discover, and hopefully it'll give you a wide and useful perspective. Now for all the sources mentioned in this video, don't forget to check out our newsletter. The link is in the description below. With that out of the way, let me get started. Some of the largest EMS companies in India seem to be making the same bet. They are spending hundreds to thousands of crores to move on from being just assemblers and start making components or trying to move ahead in the value chain. Now the logic is straightforward. If you're just assembling phones or medical devices or industrial equipment, you're taking components made elsewhere, putting them together and earning a thin service margin. Dixon's management laid out the economics plainly.
As we have been mentioning in our previous earnings calls also, the mobile these margins are closer to 3.5%, which has got on top of PLI as well, broadly 0.5-0.6% of our share of PLI income, which is getting consolidated in these margins. So one, to say that PLI will get renewed or not, sure it is very difficult to say right now.
So coming in there, Ankit and other stakeholders here, there are deep discussions happening between the industry and the government. We are optimistic about it, but to say anything with certainty is not a fair statement on my part. Are there discussions on? Yes, the discussions on.
So the industry,
is there a positive response? Yes, there is a positive response. But is it an absolute certain thing to come in? No, it's very difficult.
As a government engage with industry, a lot of data has been shared. Regarding one view is, of course, they want to give more support to the sector till the time the component ecosystem gets created. But it's very difficult to show the team. So assuming a case where it goes away, assuming a case, the worst case, it doesn't get extended, then 0.5% of markets will get impacted in our mobile business, which we have communicated earlier as well. But we feel confident that there are backward integration made. We will be able to not only overcome that margins.
Now before I go ahead, just a quick tidbit. I go through all of these con calls on ConCall Monitor by Tijori. Our team uses it to track con calls as soon as they're released, speeding up research times and even generating a quick sector report. Do check it out if you're an active investor. Now coming back, so the only way out is backward integration. Make the components yourself, displays, camera modules, printed circuit boards and whatnot. Capture more of the value chain, improve margins and reduce import dependence. Dixon's management put it this way.
And finally, we feel that almost 70-80% of our business would be integrated in the component landscape by 27-28, which will lead to an overall expansion of margins. And here I'm talking about the scenario without PLI.
That even without PLI bit matters. PLI is propping up margins right now and there was uncertainty about whether it will extend beyond FY27. But the good news for the industry is that in the recent budget, the allocation for component manufacturing was increased to 40,000 crores. Kaynes is making an even more explicit pitch. Their CFO explained,
this would mean a business potential of about 15,000 crores for the group from the customers from our current investment of 1,500 crores in the HDI PCB manufacturing operations, assuming the general thumb rule of PCB to PCB of 10% based on our own data. From the same clients, 1,500 crores of PCB revenues and 13,500 crores of EMS revenues are likely.
The logic is that if you make the PCB, you win the contract to assemble the full product. One pulls the other. It's not just margins on the PCB, it's the EMS business that follows. Syrma's MD echoed the same thing.
Okay, so in the first phase, which would be completed by December 26 or 26-27, we should be spending approximately 360-370 or crores, 360 to 400 crores, which would give us a capacity of 720,000 square meters of multi-layer line and 480,000 square meters of single layer PCBs. I personally believe that the stuffing of the multi-layer lines, the additional multi-layer lines, would be sooner than what we had envisaged. We had envisaged that the second and the third line would come towards end of calendar 27 or beginning of FY 27-28. I think it would be preponed because the traction or the inquiries or the interest which we are receiving from potential customers is very strong.
Now, customer interest is the key phrase here. It suggests customers actually want them to make these components, which means more business is on the table if they can deliver. Now, the capex isn't small. Dixon is putting 1100 to 1200 crores in display manufacturing and scaling camera modules from 40 million to 190 to 200 million units annually. Kaynes is committing 1400 crores for PCB manufacturing and 1700 to 1800 crores for OSAT, plus 250 to 300 crores on camera modules. Syrma is investing around 400 crores in the first phase of its PCB plant. But here's the thing. All of this was supposed to pay off in FY28. Dixon's management said it explicitly.
There will be additional margins which will come on a backward integration play, but that will largely play out in 27-28. But because it, both in QTech, we are doing a large capacity expansion, we are deepening the level of manufacturing, which would take us 6, 7, 8 months.
Kaynes said almost the same exact thing, but the timelines keep moving. Dixon's display JV with HKC was supposed to start trials in Q4 FY26. Now that's pushed even further. Now these things take longer than expected, and that's normal in manufacturing, but it does mean the margin improvement story keeps getting pushed out. Now there's also a genuine external shock hitting some of these companies, particularly Dixon. Memory prices have spiked because of what's happening in AI. We even wrote about this at length in one of our daily brief piece. Dixon's MD gave the clearest explanation.
The potential cutback in the smartphone shipments from the smartphone ban is struggling with an unfolding super cycle in the global memory sector. The world's top suppliers are shifting their capacity for artificial intelligence applications, resulting in a supply squeeze for the smartphone segment.
Now AI and data centers need massive amounts of memory chips. Memory manufacturers are redirecting supply away from consumer electronics to serve that demand. The result is memory prices for smartphones have shot up significantly over the last 2 quarters. And here's why that's a problem for someone like Dixon.
Memory has moved from being a relatively small line item to one of the most sensitive parts of the bill of material, especially for the lower price devices.
Now if memory prices spike, companies face a choice: absorb the cost or pass it on. Dixon says the cost is a pass-through for them, but higher phone prices can hurt demand in the lower and mid-tier segments where they operate. Now strip all of this down and the story is this. India's EMS companies, no assembly alone can't carry them very far. The margins are very thin, the bargaining power is limited, and the comfort of PLI will not last forever. Now moving into components is not an optional upgrade. It is an attempt to change the structure of the business itself, to own more of the product, earn more per unit, and rely less on incentives. But this shift comes with heavier capital, longer timelines, and far less room for error. Component manufacturing demands scale and steady demand to justify the investment, and both depend on forces these companies still do not fully control. That's it for this episode. See you in the next one.